All right, Tim Sykes here. Crazy, crazy day. Totally out of the blue. It was a slow morning, and then the afternoon was just insane. First, before I review the trades today and how I turned my losses into profits, I got to give big props to my student Woodtick. He's a challenge student, and now he's been doing this for a few months, and he's made over $200,000. So awesome, awesome job. He's been studying for a few months, but it's really clicked. And this is the key to trading. It doesn't happen all at once. Tim Grutani, my top student, 1,500 into now 3 million in roughly 5 years. He said it took him roughly 6 months of study and 3 months of trading. Or was it 3 months of study and 6 months of trading? Either way, it was 9 months before he got consistently profitable. So now let me talk about my trades today. I started off the day really bad, and I finished the day off with probably my best afternoon. I've had some losses recently on MGT and HMNY, and that's really frustrating. I don't like losses, but they happen to everybody. Here is HMNY in the past 5 days. Let me actually show you a 10-day chart so you can see where it came from. It came from the ones, and it went all the way to the 16s. And I've been trying to dip by it in here, in the 10s, thinking that it could bounce, because basically what they do is it's kind of like the Waze app where, citizens can report traffic. So Waze can adjust your traffic route away from the traffic. And their app is called Red Zone. And, it's a crappy little app, but you can report crimes. And with the Orlando shooting, all these crime stocks and safety stocks were spiking. So I thought that this had a chance of really, not necessarily coming all the way back to 15 or 16, but at least getting to like the 12s. And I was just wrong 2 days in a row. There was some money to be made if you bought it at 10-ish and sold it, at 10.50 or 11-ish. But frankly, it just didn't bounce as much as I wanted. And I had some losses. And I had a loss heading into today. And it was really frustrating. And I hate losses. And I know a lot of you guys lose, and you're like, hey, how do I stop these losses? Well, you can't. Okay? I've been doing this nearly 20 years, and I still experience losses. What you can do is cut your losses quickly when you're wrong, and move on. A lot of people are scared to cut their losses because they're like, well, what if I cut my losses and then the stock comes back later? I don't worry if the stock comes back later, because something in my thesis was wrong. So I kind of want to punish myself with a small loss. And I think that's a good way to think, because it'll force you to have better theses, to be right from the get-go. So I had losses on HMNY. Let me actually just first give props to so many students. Syndicated Trader banked on LBIX $300. Everyday Eric made some good money on TWER. Trina made $300. Eric is actually taking the day off. He's on vacation in Jamaica. So props to him for using some of his trading profits and enjoying the world. Here's Vincent, made some good money on LBIX. I'll talk about that in a second. Brian, fantastic trading on LBIX, making over $1,000. Jimmy had a great short this morning, made $750, his best profit yet. From the chat room, a few people, Hopi, 30, banked on LBIX, making nearly 20%. El Hijo made like 15%, and this other guy made some good money on LBIX. Curtis made 1,500 on EMES. And then Quinton Machine, he's a really dedicated student, and he's 9 for 10 the past 2 weeks. It's really clicking for him, and he shorted DRAM and banked. But let me talk about how I turned my losses into profits. So even though I had losses, I wasn't looking to get back into trading right away. I was like, all right, I have losses. They happen. Now let me only trade a stock that's amazing. I'm only going to come out of retirement. I think of myself as a retired trader, and I'm only going to come out of retirement when there's a play that's so great. And that play was LBIX in the middle of the day. Normally, I don't trade usually around 11 a.m. or 1 p.m., but LBIX was strong. LBIX reported earnings. It spiked dramatically from the ones all the way to the threes. And then guess what? It started bottoming in here. And there was clear bottoming. You know, I didn't dip buy it here at 10 a.m. I was buying it in here because even though it took out this low of 233, where did it go? It went to 227 and 224. So there's really only like 10 cents a share of downside here. And, you know, that's pretty good. That's kind of like, this is kind of like a little cup and handle coiling action. So for me, I want to dip buy earnings winners, especially when they're $1 a share off their highs. You know, I didn't know where the exact bottom was going to be, but at the same time, I had an idea that it was going to bounce. And sure enough, it did coil all day. You know, it traded nearly 7 million shares. There's only 2 million shares out there. So you think about it, if they reported good earnings, and, you know, it's debatable what are good earnings, but there's a good reaction to earnings. So some people like the earnings. And if there's a good reaction, then some of those people who are buying because the earnings are good or perceived to be good, they're going to hold. And that's going to take those shares out of circulation. So there's going to be less supply. And when a stock with only 2 million shares trades 7 million, every share is trading 2 or 3 times over the course of the day. And when there's not that much supply, or not as much supply as there was before, the price has to go up in order to accommodate all of the new buyers that, you know, get sellers out of their caves by raising the price. Somebody might not want to sell here at 225, but at 275 they'll sell because they have, you know, more of a profit if you're long the stock. So fantastic coiling action. I was buying it in the 220s and 240s a few different times, and a lot of people were confused because they're like, you know, it's just not really bouncing. And my whole thing was that I don't like buying midday, but at the same time, this was such a classic example straight out of my DVDs and video lessons. Dip buying low float earnings winners. It doesn't get much more clear cut than this. And when the afternoon came around, I wanted you guys to understand that I was long biased and that there was tons of support here in the 220s, 230s. Okay, so if any of my dip buys, if it started really tanking, you know, and I'm not saying, you know, my first buy was at 229, and the lowest it got was like 221. So at worst, I could have lost 8 cents a share. At worst. And I thought that it could bounce, not necessarily back to 3, but the high twos. And as it turned out, you know, it bounced roughly, what was the high here? Like 280. So it bounced roughly 50 cents a share from my first buy. So when there's 9 cents a share of downside and 50 cents a share of upside, that's pretty good risk reward. That's roughly 5-to-1 risk reward. And, you know, then I was buying in the 240s and it just kept uptrending. I didn't get out all the way at the top here in the 280s, but I had a pretty good sell in the 270s and 260s and 250s. I was all over the place. I traded this a lot, those of you guys who saw my alerts. But from bottom to top, there was 50 cents of upside. And I was very proud of that. And I have a small position overnight because I think that it can have another one of these spikes. I don't know if it can go all the way from 2 to 3, but I would love to see it retest this 280 level. Right now it's like 247 by 250. I'm up a few cents a share on my overnight position. But that is the secret to overcoming losses. You go back to a pattern that works time and time again for you. And as this was happening, as I was profiting, you know, roughly $2,000 on a few different trades here, guess what? Something even better popped up. And this was probably one of my best trades in quite a while. And I bought, you know, just a small position. I know 35,000 shares looks like a lot, but we're talking about a 20-cent stock. So we're talking about a few $1,000s. You know, not very much money at all. And this is the beauty of penny stocks. And so, you know, it had already spiked. So let me be very clear about this. I don't want to buy this stock right when they report earnings. This company was weird. They reported earnings in the middle of the day. I don't want to buy it when the earnings are coming out. I want to see the reaction. But the reaction was very good. From 15 up to 20, came down a little, consolidated, then it went up to like 22, 22.5. And I was dip buying it in here because at this point, it had already hit 22. At worst, you know, the bottom here was like 17 and a half. I didn't quite catch the bottom at 18. I actually got in at 20-ish. It was tough to get a good fill here because I think a lot of you guys are learning dip buying earnings winners works. But even my buy at 20, what is the downside? I might lose a penny or two if I'm wrong, but here was the upside. And it went up. I didn't expect it to go up to 38 cents or 35 cents now. So, 15 cents of upside right now from my buy and only 2 cents of potential downside. That's 7 or 8 to 1 risk reward. And I'm buying an earnings winner, and this stock has recently spiked. It's gone viral before like this. Even though it couldn't hold it, it still spiked a ton. So it has a history of spiking and it has a history of failing, which is important. So my whole goal was to sell it in the mid 20s or the high 20s if the news really catches on overnight. So I bought this, at 3:25 p.m. I specifically planned to hold it overnight. But at the same time, because I knew that this one had spiked before and failed, I didn't want to just, hold it forever. So, I thought that it could break out past the former day highs of 22, which would have been like a 10% gain for me. And my goal was like 25 or 27 or 28. And that's exactly what happened. And so I got out at 25 and 28, maybe some at 27.5. I don't know. It was really quick, but the executions were good. The stock is traded, 12 million shares. So it's a very, very liquid stock. I had a small position of a few $1,000s, and it just kept going. I totally, totally underestimated it. I still made, 30% on my money, but as it turned out, I could have made like 75 or 100% on my money. That's okay. I'm not complaining. You will see me take 20, 30% gains again and again and again because I'm taking the meat of the move. And it's fantastic, So out of the blue, after a disappointing morning when the stock didn't do what I wanted, uh, these two stocks did, one after the other better than I expected. And that's all you can do. When you have losses, you wait. Sometimes it won't be the same day. Usually it won't, but right now this market is just so hot, and so many of you guys are seeing that, which is awesome. But whenever there's another good play, another good setup, and I'm sorry I'm losing my voice. I just did an hour-long interview too um, with Mixergy, so check that out. It'll be up in a few days. But that is the secret to reversing losses. It's not about revenge trading. It's not about looking to get, right back on it, right away, even though it does look like that with my trades. I specifically waited for the right catalyst. I had seen LBIX in the morning, but it's almost impossible to try and catch this, let alone alert this. When it goes from 195 and then 5 minutes later it's at 325. So I specifically was doing nothing, but I put it on my watch list. That's what you guys need to do. You need to put interesting plays on your watch list and not necessarily act right away. When TWER spiked here, guess what? A lot of students had it on their watch list. A lot of students actually were invested in this. Where was one guy? I called him out on my Twitter. There's so many tweets, I can't even keep track. Oh, here's another guy. Legal Pimp is banking on EXAS. Made money two ways. Let's see. Oh, where was it? I know I think I tweeted it. Did I? I don't even know. I guess not. I don't know. One guy got in at 18 cents on TWER, and it was pretty sweet that he got in before me. And I highlighted it on Profitly. Where's my Profitly? Hold on, give me a second. In my stream. I'm going to highlight this guy. was he? Did I put it in my stream? I don't know. It's late in the day. Ah, here he is. Good. So this student, his name is E-Man from Delco 85. And so this was at 3:22 p.m. This was before I bought. So this is what I really want to show you guys. My top students don't follow alerts. They don't rely on alerts. They don't rely on anybody else. And that is frankly why I have more millionaire students than anybody, because I teach self-sufficiency. We don't trade together. We don't all trade the same stocks, but we are prepared with the right indicators. And so E-Man from Delco 85, who I have no idea who it is, but I saw this in the chat room, and he said TWER strong action off 0.182 buy, looking for morning spike, former runner on good earnings guidance. That was almost exact what my own alert was, and I bought it a few minutes later and at 20 cents. I didn't even see his alert. This was in the challenge chat room until after I bought. But this is what I want from you, okay? I want you to recognize these spikes, and I want you to be self-sufficient and trade them on your own. Never, ever, ever follow alerts from me or anybody else, but learn from those of us who share our strategies, who share our indicators. This is not rocket science. I'm looking for penny stocks that have recently spiked or spiked big in the past, that have a new catalyst, ideally earnings or, contract wins, and I'm looking for them to rise even more. I know there were other chat rooms that thought DRAM today was going to be a huge winner because DRAM was spiking yesterday on news of a merger with a gold company, and there was not a chance in hell that I was buying this today. I don't like commodity plays. So even though this is good price action on news of a merger, up from 80 cents up to $1.60, so it's doubling, so people are interested, it's not my catalyst. And you wonder why it's not my catalyst. Well, guess what? Now you know why. Okay? You learn over time what kind of news can drive a stock. Sometimes I'm wrong. Sometimes an earnings win doesn't keep going. Sometimes a speculative play like this does keep going. But when I focus on my bread and butter patterns, like LBIX, dip buying it, not chasing it, but dip buying it when it's showing signs of support and being a perfect cup and handle, you got 50 cents a share of upside. When I'm dip buying TWER, not chasing it at the highs here, but dip buying it, thus limiting my risk, and I guess in this case it wouldn't have even mattered even if I did chase it at 22 cents, considering it's at 35 cents. But the fact that I'm dip buying it lessens my risk, and it gives me a chance. What if this stock does break 22? It could have double topped at 22 for all I know. And then it would have come down to 21 or 20, and guess what? I would have gotten out roughly break even probably tomorrow. I would have given it time if it had double top because, frankly, I wanted to hold this stock overnight. But it didn't double top, and it didn't look back, and the volume was just absolutely massive in the last half hour. So I was dead on right about this, and I even underestimated it. And that is how you get back from losses. You go back to the patterns on which you are most comfortable, on which you make the most money. Even if you screw up the timing a little bit, you get your confidence back, you get your profits back, ideally. And, that's it. You should not be always thinking about your losses and how they influence you. Every trade is one and done. When I lose on a trade, okay, I lost. What's next? Do I need to trade right away? No. Is there a good trade right now? I don't know. Let me see. If I have the patience to wait for the proper setups that I've come to know and love and now teach, patterns that I've refined for over, nearly 2 decades now. That's how I get my money back. That's how I get my confidence back. And even if I didn't have any losses, these are the kinds of trades that I should wait for. But sometimes it takes losses to, smarten you up and get you a little more disciplined. Because when you're profiting here or there all the time, little profits, it's addictive. But, when you have losses, even if they're small losses, they wake you up and they say, whoa, wait a minute, let's pull back and focus on only the stuff that we really know best. So even if you're a beginner, you can at least learn from my 2 decades of experience, because I basically chronicled all the patterns that work and don't work, and then gradually build your own experience and see what patterns work best for you. I love dip buying earnings winners, as you can see. Sometimes I try other speculative plays, but dip buying earnings winners, far and away, are my favorite strategy right now. So I'll see you guys in the chat room. Come early tomorrow morning. There are literally a dozen or two trades that I can see happening. I'll put it in the watch list tonight, but those of you who are in the watch list every morning, or in the chat room every morning pre-market between 9 and 9:30 a.m. Eastern, you see what stocks are moving pre-market. That's a good sign as to what could potentially spike. I know a lot of you guys in the chat room this morning were looking at DRAM pre-market, and guess what? It was down 5 or 10 cents a share pre-market. No matter what other chat rooms, no matter what anybody else is saying, when a stock is red on the day, 5 or 10 cents a share, I don't care if it tries to uptrend right here. Look, it tried to uptrend. It's still fucking down on the day, pre-market. That is not a good sign, okay? And that's not to say that pre-market gains are always going to hold up. You know, my HMNY was up nicely pre-market. It was very small volume, but still, it was up pre-market, and that did not hold on. So this is a very tough game. Remember, 90 to 95% of traders lose money. So you need all of the indicators on your side. Am I ever going to buy a stock that's pre-market red on the day? The answer is fuck no. Okay? Even stocks that are up pre-market, you're not guaranteed to get morning spikes. But stocks that are down pre-market, your odds are even lower. So stop trying to make this game so difficult. You know, this is not like a diving championship where, you know, you're a Korean diver and you have to have the least splash and the degree of difficulty is rated by the judges. There is no degree of difficulty with trading. Trades that are very difficult, just don't do them. You know? That's not to say that DRAM couldn't have spiked at the open. It's just that when it's red on the day pre-market, your odds of success are lower. Your degree of difficulty is higher. I'm working on a guide right now called Trade Checklist, which is going to explain all of this, and I'm really excited to get that out to you in July. But for right now, just know that you want to trade gimmies. If you're looking to reverse losses and turn into profits, or even if you have no losses and you want profits, focus on gimmies. If there are no gimmies, don't feel the need to trade. I know you guys want to trade. I know there's so many stocks. People are posting all the money. You feel like you're missing out. FOMO, right? Fear of missing out. But do not fear missing out. Fear losing. Fear being like 90% of this industry. Fear being like all these people on Twitter who don't show their trades transparently, and that's why they're not on Profitly, and they post a screenshot or two of their gains, and then they never post screenshots of their losses. Because guess what? They're fucking liars. We are an industry full of liars. Do not trust anybody who does not show every single trade publicly. What are they hiding? Why are they hiding? Do not learn from anybody who does not show everything transparently. I show my brokerage statements, my audits, my trades in real time, my tax returns. I show it all because I want you to learn. And if you have any doubts, don't learn. You know, some people are like, they message me and they're like, oh, you know, you need to do this, this, and this, and then I'll give your stuff a try. And I'm like, no, no, no. That's not how it works. I don't need you. You need me. If you have any doubt about my strategy, go try and buy DRAM and see how you do. The market will teach you. That's the beauty of my business. All I have to do is teach honestly about the things that I've learned over the past 2 decades. And if you want to ignore me, that's fine. If you want to trade against me, that's fine. But know that I win the vast majority of the time. And it's because what I teach has been refined over time. So if you want to bet against a 20-cent stock that's an earnings winner, go for it. I wish you Godspeed. I wish you all the luck in the world. But at the same time, understand that all I'm doing is teaching stuff and patterns and rules and lessons that I've learned over the past 18 years. So take it or leave it. It's up to you. I'm trying to help you, but if you have any doubts or if you have any attitude issues, don't learn. I will not be offended. I'm already overwhelmed. I'm already losing my voice. I'm going to go have some freaking lemon tea right now. You know, a decade ago, I'd go out and party all night. Now I'm drinking fucking lemon tea. Good night. I'll see you guys in the chat room tomorrow.